The fourth industrial revolution is changing the technological face of the economy with widespread digital financial technologies. These are considered a significant factor in economic transformation.
National inclusion as a result of the above is now standing at 66% compared to 59% in 2017, with mobile money as a key driver.
The impact is really driven by what do consumers want. Consumers generally want easy-to-use solutions. They also want low-cost solutions, and they also want solutions that are accessible. Agency banking, mobile money, and other developments in the industry have started to deliver these things.
The main trend in the considered area is the intensification of competition between banks and IT companies, which makes it necessary for banks to change the traditional banking business model.
Nobody can be successful alone within this sector. And that's why you have seen, for example, banks work very closely with InterSwitch to support their ATM switching and ATM interoperability, whereby you can go to when you have a card of one bank, you can go to another bank and get your money.
I believe banks have changed the way they think, banks have changed the way they play, and so it's very critical that we spend some time seeing what else can we innovate around financial inclusion.
The convergence of different sectors of the economy will lead to the formation of new integral industries based on digital and fintech technologies.
It is starting to change, and local investors are starting to get attracted to innovations, not just in finance, across the health sector, across education, etc. And there are some innovations that are coming up.
Despite the significance of these emerging payment technologies, when unregulated, can expose the public to fraudsters and other cybersecurity cases.
The central bank has a critical role to play in that learning process. I believe that regulation will catch up with technology in some ways. In other ways, technology will continue to be ahead. But it's important to know that what is good for the consumer in terms of regulation is good for the operators, and it's also good for the central bank.
We have to invest a lot in awareness creation in terms of the threats a user will face. Someone has stolen your PIN, someone has called you, you've given out your PIN.
The development of a national payment policy by the central bank is one of the regulatory framework streamlining the sector.
National Payment System Regulatory Framework is a regulatory sandbox which aims to promote innovation and product testing under a live but controlled setting with a regulatory oversight. The sandbox supports product innovation, which aids competition and enhances consumer experience.
These technologies working in silos makes their services expensive. This limits adaptation.
And Bank of Uganda has set up a good number of those sandboxes where different platforms can actually test their products or services.
Innovators recommend open APIs to offer opportunities to new innovations to thrive.
Open APIs allows you to accelerate that process. It therefore allows the acceleration of innovation. It allows the acceleration of service delivery to consumers. Open APIs will allow us to deliver more services very, very fast.
Central Bank is developing a national payment switch to reduce on the cost of production for financial technologies and will improve on transparency.
Significant discussions with them to understand better that what kind of switch, payment switch does Uganda require, given our systems here. What type of switch do we require? So we have had the discussions, and as a result, the discussions have culminated into what we call the business and the technical requirements for this business switch.
For a national switch. It's very important because it can support faster and more resilient interconnectivity between different players.
So this payment switch was supposed to enable those cross-border trade payments, which are informal. But those, say, for example, if I'm at the border with DRC, I should be able to make my payment in my Uganda shillings through MTN with a player who is on DRC using their franc. The same with South Sudan. It should not matter what currency I am in.
InterSwitch East Africa has been on the forefront of promoting the interoperability of financial institutions.
We're working very closely with the National Switch in DRC and across several other countries, including Kenya. So we know what it takes to run a switch, and we can support the central bank and are doing so to do that.
The high cost of gadgets, especially phones and other related machines, hinder the process of digitization.
Would desire that every Ugandan gets a smartphone, because that's the only way they will enjoy broadband services. Because with that button phone, it cannot do internet. But there are those phones, whether it is a smartphone, whether it's a button phone, that are substandard.
Bring down the cost of devices, that is the terminals, the phones, the computers, the laptops, and everything else. And I believe the other is digital literacy. Digital literacy in terms of how do people use these tools and what services can they access.
The digital space in Uganda is expressing innovativeness and quickly adaptive towards the fourth industrial revolution. This aligns with Uganda's National Development Plan 3, and unregulated new payment innovations are likely to cause more harm than good.